It's about that time of day again here, boys and girls. Newsletter time. JJ here. School of Trade, sidewaysmarkets.com is our blog address. Welcome back. Nightly newsletter, Wednesday evening, February 4th, 2015, the fourth day of the second month of the year 2015, and we had a Wednesday today. Gold giving us selling opportunities, and I think we got some short selling opportunities on crude. Boy, I don't know, right? What we do, $5 down today on crude. Big day down on crude. And just at the end of the day today, the Russell finally begins its descent off the highs. We've been talking about this all week, guys. Been talking about how up at those highs, we were excited to sell those highs. We got crude, we got gold, and we're just getting the engine warmed up on this Russell. Boy, do we have an exciting newsletter in store for you guys and gals tonight. Before I jump into the newsletter, though, for tonight, I do want to remind you, make sure you're watching this video on our trading blog right now. Now, besides having a wealth of trading information here for you guys, there are three reasons why you should be watching this video on our trading blog right now. The first reason, you can download all of my charts by following that link right below the video. That's right. All the charts I'm going to go over tonight, you can download all of those and have them ready for your trading session tomorrow morning or later on tonight, whatever it is. Second thing, upper left-hand corner, you might be wondering, what does it feel like to be a member of School of Trade? You might be curious, how do we actually use these levels in our trade room? I've got a special free pass for anyone out there who is not currently a member of SchoolOfTrade.com and you're curious and you'd like to see what our trade room is all about. Grab that free pass, upper left-hand corner. Don't forget, part of your trial as well. Last but not least, spot for your name and your email address for our nightly newsletter mailing list. All right, guys, so three things here on the blog tonight. One, download all those charts. Two, grab your free pass for my trade room as a guest. And three, register for the nightly newsletter mailing list. That way you'll never miss another newsletter ever again. Now, if you register for the newsletter list or you grab your free pass, I'm going to send you a verification email. So make sure you check that email and verify that you got it. That way I know I get the right email address and I know you're not a robot. All right, guys, let's rock and roll. Helmets on, seatbelts fastened. I think we're ready to rock and roll. What a Wednesday. What a Wednesday we had. Let's start out here with that funny yellow metal they call gold futures. Now, again, earlier this week, we gave you guys sells off the highs late last week, right? Early this week, late last week, gave you guys some sells off the highs. Gave you guys one more sell today. And you can see here, we're starting to look a little bit triangular, right? Starting to look a little bit sideways here right now on the gold. We have no volume clues right now, but we definitely can tell gold, it's not bullish. You know, it's difficult for me to look at this chart and say we're bullish right now. So gold is clearly bearish, but we're trading inside of this wedge. So my plan for gold right now is to stay patient, keep looking to sell short, and look for those short selling opportunities with the proper entry trigger at the resistance areas overhead. So right now, big sell zone here at 1274.8. Now heads up on this one, because you know today we got the short off of that level already today. I called that in last night's newsletter. So this range right here, this is a very weak resistance zone because it's already been tested. In fact, it's already been tested twice. Okay, we got kind of a double tap there before it collapsed here this morning. So we got the short off this zone already. I leave it on there because it hasn't been technically broken yet, but it is, if I had to guess right now, I would say we blow right through that zone and up to this area up here, 1287.4, 1280.7, possibly all the way back up to that 96.9 to 1302. We get that big round number at 1300 up there. I don't think we're going to make it that far, but one of the most important lessons we've learned after watching this price go up and then all the way back down, whether it be gold or crude oil this week, is to focus on the directional trend and wait patiently. Right now, don't get roped into these buyers right now. Wait patiently to sell those highs. I think the biggest trouble we're going to have is if you're not prepared for this triangle. What I mean by that is that you're not going to be able to go out and get a home run sell off this high. You're going to have to take some profit at the low of that triangle and then hold on to see if you can get these bigger targets down bottom. If we get a nice big move, though, we've got a measured move target down here at 1240. A, B, C. I'm actually quite surprised we didn't get down there already, but we know one more time here, couple options here to sell overhead, and then again, make sure you're taking your profit off at the low of that triangle because it will be a major level of support. So that's the one thing you got to be aware of here on gold. Let's keep moving. From the gold 32 to the gold 16, okay, now this is a much more important chart, right? You can see that triangle that we drew in, right? We kind of got this trend line down, trend line up, right? There's that little triangle. Now again, don't take the bait here right now. We're definitely bullish in the very short term. You can see kind of some higher lows and I don't like saying higher highs, but they are higher highs, right? Higher lows, higher highs. It's a very almost flat, right, bullish trend channel. And here we are right up near the highs now. In fact, I can get rid of this rectangle right here, get rid of that. When I created this chart, we had just opened up. So we are now up at, and there's a couple ways to look at this right now. I look at this and I say, okay, we have a trading range right here, right? There's a trading range. And where are we? We're up at the highs of that range. You don't buy the highs, you sell the highs, right? If we learned one thing from this week, you do not buy those highs. Yes, sometimes it keeps going higher, but you don't buy it, right? You wait for it to trigger the short when you get in for the collapse off the highs. So the first thing I see is a trading range, and we're at the highs. Okay, maybe you're a bull right now. Maybe you've got this bullish channel. Where are we there? At the highs. Again, I still have no option to be a buyer right now. Okay, the only option right now when we're at the highs of any range, whether it be a channel, a wedge, a triangle, a trading range like we're seeing right now, it doesn't matter, right? I'm not going to look for a buy up here. And then, of course, the last thing that I see here is we have this AB to CD, right? See that? We call this a measured move, which is a simple ABCD pattern. You know, it's amazing, guys. The simplest things in the markets work the best. Ever notice the only people that use complicated systems are the ones who are trying to sell them to you? Yeah. And they don't make any money with those either, trust me. Okay, or else they wouldn't be selling their magic indicators. Guys, indicators are going to confuse you. Read the price action, right? Read the chart. The chart will tell you exactly what's going on. So we know we have that ABCD. So right now, I've got sell zone here, sell zone here, sell zone here. All you have to do right now, and many of you know my favorite reversal patterns, but all we need to do right now is wait for price to fail and look for the short. So price goes up, these buyers try, they fail, and whoops-a-daisy, right? We take it on to the downside. That's the easiest way to get short. The easiest way to get short at the highs is to look for where the buyers, the undoubtedly uneducated buyers, where those buyers are going to be failing. If you need more help on that, don't forget you're not alone. Come out and see me tomorrow in our live trade, and I'll walk you right through what I mean when I say the buyer's failing. Now, how about some price action here on this funny yellow metal, the gold futures? So gold price action is very much sideways. Got a long-term bearish trend, but again, you can see this chart really shows us a lot of important clues here. We can see we're at the top of the trading range. We want to sell the top of the trading range. You can see this tiny short-term bull channel. You can kind of see how this is kind of lining up with that previous chart. The top of the bull channel. So you can see here, very difficult for me to be a buyer right now. So we know there's a long-term bearish trend, so we focus on selling at resistance levels overhead, right? So we're looking to sell, sorry about that, looking to sell the highs here, looking to sell the range extensions overhead. Okay, take this range, copy it, paste it, copy it, paste it, and now you can see where I'm getting. And look at this to the downside, guys. What a coincidence to the downside. So you take this range, right? This is what I mean by range expansion. You take this range, you copy it, you paste it, you put it below, you copy it, you paste it, you put it above, And that's where I get that 1290.3 and that 1239.8. Now, that's not really that amazing. What is very interesting is that when we see this AB to CD, another measured move, and that just happens to put us right at the same spot. Coincidence, huh? I don't think so. These markets are one big symphony orchestra where every instrument is in a different location and there's no conductor. Yep, think about that for a second, how amazing these markets really are. What it really is, it's the brilliant, it's the wisdom of crowds. It's crowd psychology. Crowd psychology, if you ever need a great book, James Sirowicki, The Wisdom of Crowds. What a great book. What a great book. If you're a member of mine, you can download that inside of our download section here at School of Trade. Talk about cool, man, right? The Wisdom of Crowds. Individual humans are very unpredictable, but you put a group of people together and they are as predictable as the sunrise. Okay, let's move here from the gold to that mighty mini Russell. Now remember, like I said, this is the market. This one's just getting warmed up. You got gold off the highs. I think we got crude off the highs. I'll have to check here in a second. I'm kidding with you, obviously. Yeah, we had like a $5 move down today on the highs, off the highs on crude. I'm not going to say I called that a mile away, but I did. And now looking at the Russell, this one is just getting started now. Just getting started now. And you can see remember this last night? Last night I said we're going to go higher here because we saw the volume was going higher. Last night on the Russell, last night on the newsletter for the Russell, we talked about how the volume confirmed the move going higher on the Russell yesterday. That's why we expected the price to go higher before it goes lower. We got that, right? We got it going higher here. And then you can see how the buyers tried to buy this support level here, and then when they failed, now we have the triggers here. So we're definitely bearish here coming off these highs, just as we expected. We pushed higher before we saw the buyers fail at those channel lows, and now we roll over. So focus on selling short right now on this Russell. And what we might have happen here is, well, you'll see more on this next chart, but do not be surprised if we make it a little bit of a curveball here before we go lower, right? Go up higher, bounce off that trend line, and then make the move lower. Remember, guys, these markets, the financial markets, they are built to take your money, kill your confidence, and send you crying out the back door. Remember, these markets are built to be difficult. They are, right? If it was easy, we wouldn't make all this money. If it was easy, the best traders in the world wouldn't make up the Forbes 50 list every single year. You get the point. So it's not going to be as easy as just collapse. Now, maybe it will be, but probably not, right? Like crude today, that was almost too easy, right? But the reality is, though, I would expect this to try to make a move higher before it goes lower. So keep an eye out on that trend line. Keep an eye out on that resistance zone. Keep an eye out on this reversal line at 87.4. Okay, guys? But we are definitely off to the races here to the downside right now. I would expect it to be a little bit more challenging than just a collapse. But if we do collapse or we get the short off the high again, we've got some targets waiting for you guys to the downside on that Russell. Let's keep going. Russell 32, break it down to the 16. And this was the chart from last night that told us a story. Remember this from last night? We marked up the highs. We marked up the, where was it here? The highs. And that's what gave us that clue that we were going to go higher before we go lower, right? Remember that from last night? If you don't, go back and watch last night's newsletter video. You'll see this in all of our glory from yesterday. So now we have that lower low, the lower high. Now remember, guys, anyone can put together a one-day rally or a one-day collapse. Anybody, right? Any market in the world at any day of the week, any week of the month, it's easy to put together a one-day rally. It's easy to put together a one-day collapse where we turn from sideways to very bearish. Because right now, you're going to notice, I'm going to show you guys this on the next chart here, but you're going to notice this is a bit of a trading range. Okay, this is a bit of a trading range. If you look down bottom, follow the bouncing ball here. Look down bottom, look at the volume, and you can see volume does not confirm the move lower. With me on this right now? Okay, so we get lower lows in price. We should be seeing higher highs in volume. I need the volume to be confirmed going higher as this market is going lower if I want to confirm to the downside. So what are we going to do? So that trading range combined with the lack of volume confirmation tells me that as of right now, I just have to assume we're going sideways tomorrow. But we are an inch away from this thing completely falling apart. Here's what I'm looking for tomorrow. I'm looking for it to go up, test the high of this new bear channel, test the resistance overhead, right? Maybe it's this one, maybe it's that one, difficult to tell. But that would make perfect sense for tomorrow, okay? That'll make perfect sense for tomorrow. Because what you're going to see here is without that volume confirming, we're probably going to get stuck in the mud here a little bit at these lows. Like I said before, it's not going to be as easy as just selling short. It's going to make us work for it. So expect this price to go up, rattle around, and then when it comes back down, that's when I call this bearish. That's when I call this bearish. Think of it this way. This is what I call the trend life cycle. Think of it this way. We have a sideways range. We break out. We pull back. Now I'm bullish. When I break out, that's the one-day rally. Anybody can put together a rally. But can you hold it on the pullback? When we see the buyers hold it on the pullback, and it can go back into that range, but the bottom line is it holds on the pullback, now we're bullish. Right? So now we're bullish. We're not bullish till we hold that pullback. We keep going higher, we keep going higher, we keep going higher, and then all of a sudden we don't see those higher highs any longer. Are we bearish yet? No, we're not bearish. Are we bullish? We're sideways here, right? So now we draw out. And again, once again, we make that low. This is once again, like I said before, anybody can put together a one-day push lower. I'm not calling that bearish yet. I'm calling it bearish once we see the sellers defend on the retracement. Now I call this bearish. All right? If you ever want to read up on this, study Mr. Richard Wyckoff. Richard Wyckoff was one of the forefathers of westernized technical analysis. I teach all of his stuff in our beginner's course here at School of Trade. I personally believe that Richard Wyckoff was probably the most useful information in today's markets. You know, you got Dow theory, you've got Gann theory, but Richard Wyckoff, though, his stuff really still has stood the test of time. And you'll learn about this, right, in Wyckoff theory. It's right in our beginner's course, right? Don't take my word for it. Check it out, right? It's not that expensive. You can learn all about it. Really what we're doing is we're using those forefathers of technical analysis, we're using that information in today's marketplace, right? Because you can't really use it directly. You're not going to use Dow theory to make any money these days, right? Dow was looking at industrial average. You know, you're not going to use it. So Richard Wyckoff. But so basically right now, we have that one-day move lower, and I'm expecting it to go higher before it goes lower. And once it holds that retracement, that's when we know we got those buyers beat and those sellers are back in control. I've got targets waiting for me below. You can see a lot of easy targets. If I had to guess right now, I'd be shooting for this area right here. The reason I say that is because we have this trading range over here, and you'll notice that's where we break out the pullback and go. So literally that area right here, 66.7, that's where I'd be expecting us to go if this gets bloody tomorrow morning, all right, or tomorrow afternoon. Again, don't forget, you do not need to do this on your own, guys. Come out and see me tomorrow. I'll walk you right through all this good stuff. Let's wrap up the Russell here on our price action chart. Okay, we have 3 reasons to wait for price to move higher before it moves lower. Now you'll notice this is a very different looking chart, right? These are tick charts. This is a 1400 tick. We call this a price action chart. The only indicator on here is a very simple moving average. And we really don't even need that. Now, 3 reasons, okay, and you've seen most of this already. This is just a different look at it. But I've got 3 reasons on this chart of why I expect price to go higher before it goes lower. Reason number 1, we're at the lows of the trading range, right? So here's the trading range, and here we are right at the lows. Can't sell that. Don't sell that, right? Do not sell lows. Do not buy highs. Do the opposite. The second reason, an overshoot on this bear channel. This is easy to see. Look at the channel. Look at the overshoot. Now, what does an overshoot tell me? An overshoot of the channel tells me expect an above average correction. Okay, so when we overdid it to the downside, we're probably going to overdo it to the upside. The third reason here to wait for price to go higher before we go lower is the completion of the measured move. A, B, C, D, not perfect, right? But it's pretty darn close. We get a measured move at those lows. Now, my gut tells me, which by the way is not a trading strategy. I don't trade my gut instincts. I trade what my plan says. And I'll teach you how to do that at School of Trade. My gut tells me that we go higher before we go lower. If that's the case, just remember the low of this range is going to be target number 1. So if we go higher before we go lower, target number 1. Target number 2. Target number 3. Now, what if we go lower here? If we go lower, be careful selling this low. If we go lower without going higher, breakout, retrace. Breakout, retrace, right? Very, very simple, very straightforward. And if you need more clarification on that, let me know tomorrow morning in my trade room. Wrapping up here, wrapping up with our crude oil futures. Yeah. I know. I got some emails on Monday night saying, what happened to the big short on Tuesday? And I said, just hold on tight. It's coming. It's coming. So clearly these buyers had something in their underpants, right, on Tuesday, because it didn't give us that sell we were looking for, right? We got a couple nibbles to the downside, but it just kept blowing right through, right? We got a couple one target, winners, scratched out, kept going higher. We saw this coming a mile away, right? Literally 10 miles away. The very first thing I said this week was just you be ready for that thing to come off these highs. And that's exactly what we've got. Now, we collapsed off the highs, right? We're not surprised about that. And we have 3 reasons to wait for price to move higher before it goes lower. Now, I always tell my clients, my students, my members at School of Trade, one of the most common things you'll hear me say is stop thinking so much, right? Stop thinking so much. And what I mean by that is just trade what you see on the chart. Don't think about what might happen because this happened and that happened, right? Don't overthink it. Turn the television set off, first of all, right? Clean off the chart with too many indicators. Listen to what the market's telling you. And if you don't know what I'm talking about, I would love to help you put together a plan as a member here at School of Trade. But let's say that I did want to overthink this. Let's think this through, right? Let's think about this. We had a huge down day today, right? Something like, was it $5, $6, something like that, $5.50 down. Okay, gotta love these huge ranges. By the way, 1 year ago, we would have begged for a $2 day, right? So we're loving this volatility right now for sure. The deal is, big move down, we're probably going to get some profit taking. We're probably going to get some bargain hunters. We're probably going to get some folks that are trying to overthink it, and they're going to buy as well. Remember, it's called the gambler's fallacy, right? What's the gambler's fallacy? Again, I teach you that in the beginner's course at School of Trade. The gambler's fallacy says, we made a $5 move down. We can't keep going lower, right? Oh, absolutely we can. Have we forgotten about the entire month of December? Eh? Come on. So we know there's no reason at all this can't keep going lower. That's what I mean when I say don't think so much, right? You're thinking about it too much. Well, it went all the way down and it can't keep going lower. Stop it. You're thinking this thing too much. Okay, so if I do think it through, I could definitely see why we may see price go higher, but that's not what the chart tells me. The chart does give me 3 reasons why we should go higher. None of those reasons are just because it can't keep going lower. Make sense? Okay. First one, the measured move completion. Follow the bouncing ball. A to B, C to D. It's not perfect. We overshot it by a little bit, but that is a measured move completion. That's one. Number 2, major support zone. And this should look very familiar. Remember how I told you guys to keep an eye on this in the Russell? See, if I crossed out this chart, if you didn't know what I was trading right now, couldn't this kind of sort of look like that Russell chart? Right? So this is why I said last night, look for that 50, look for that 48, right? Okay, so nothing different. Last night we gave you guys this stuff. So we know that we have this major support zone, right? It's a major support zone. That tells me we're probably going to get some buyers here at support. And the third thing we see is that bear channel overshoot. Mark up the highs, mark up the lows, and you can see overshoot, right? Now, what's an overshoot? Again, we just talked about that in the Russell, right? An overshoot tells me that, these sellers were drinking the Kool-Aid a little bit too much. They were sipping on the Kool-Aid a little bit too much, and they overdid it to the downside. Usually when we get an overshoot to the downside, we get an overcorrection to the upside. So those are 3 reasons that the chart tells me. I can think like a gambler, but I'm going to encourage you not to do that. So I would expect your price to go higher before it goes lower. So we're looking at a sell. We're looking at a sell. I don't think we go this high, but hey, this is crew we're talking about, boys and girls, right? Anything can happen, anything. We know that we have these levels of resistance waiting for us overhead. Look to get short. Whatever you do, do not sell short right now. But Joe, what if we keep going lower? If we keep going lower, sell those retracements. But do not sell this low right now. If you like money, if you like your money, right, then don't sell this low. Right? If you hate your money, though, if you hate that trade account, you want to blow that trade account up, go ahead and sell right at those lows for me. Let's keep going. Next up here on the crew, we get a 16. Look at all these resistance levels overhead. Jeez Louise. I mean, it's incredible. This is the stuff we live for as day traders, right? All the way up, 1.5 days all the way up, and 1 day right back up. Ever heard that term easy come, easy go? Right? Ever heard that term easy come, easy go? Ever heard that term what big pops usually equal big drops, right? This is all based on what's happened in the past, and you can easily see this would happen again. It's going to keep happening like this over and over and over again. That's the best part about being a trader. Once you pick up on this stuff, then you're free. You don't need to go get some job somewhere, right? Just do this on every chart you see. It's not difficult. But, the age-old story, if you don't know what you're looking for, well, it's going to take you decades to figure it out on your own. It took me almost a decade to figure it out on my own. I'm gladly going to share it with you. So crude oil's bearish. This massive push lower tells us the price will most likely retrace higher. Again, don't think like a gambler, but, big $5 move down. You're going to get some folks thinking this thing a little bit too much. So we're likely to get a retrace before we push lower again. So we've got sell zone, sell zone, sell zone. There's quite a few zones up here. And remember, guys, we're not just going to blindly sell these areas. What are we going to do? We're going to look for an entry trigger. Okay, so look for price to go up and then coming right back down. Now, if I zoom out a little bit further here, I just lost that chart. Let me get that chart back here. What did I do? Hold on 1 second. Houston, we have a problem. There's my 32. Where's my, I must have closed it. All right. Well, we will move on without it. But what I was going to say was make sure you stay patient as this price rises to look for that reversal. Okay? Now, last but not least here, 2400 tick chart here on the crude. Price action is bearish. Here's some pretty important clues here. Take a look at the text in the chart. We had a monster move lower today, and the channel overshoot, channel overshoot makes this easy to see price will overcorrect and give us more selling opportunities up at the resistance levels above. So stay patient. That's one reason why I think we're going to see this price go higher. Here's another reason why. You'll notice it's a short-term bull channel. We broke that low. So we're probably going to see these buyers try to retest that high again. If I had a crystal ball, I would say we go up, pull back, breakout, pull back, up, 50-41, 50 even, somewhere in this area for the next leg back down. All right? Now, if we do go lower, breakout, retrace. Okay? If we end up staying inside this range, I want you to think breakouts. If you don't know the breakout patterns yet, just take my trial. In my free trial, I'm going to teach you my 5 breakout patterns. I know, right? In the free thinking trial. I don't know what I'm thinking. I was the one sipping on the cough medicine, that's for sure. Anyways, so I do expect price because of that bull channel, because of the bull channel break. I expect those buyers to try once. If they're successful making new highs, it'll probably pull back and make another run for it. And then again, that's where you're going to see range resistance. Take this range, copy and paste, right? And that's where you get those highs, that range. If we do end up trading inside of this range here, look to sell the high, sell the high, sell the high. If we go lower, sell with the retrace, right? Breakout, retrace. It's all according to plan here, guys. Remember, you don't have to do this on your own, boys and girls, so make sure you come out and see me tomorrow morning in our live trade room, 8 a.m. Eastern Time. Grab your free pass, register for the newsletter list, download my charts for tomorrow, and oh, by the way, if you have some free time, check out our 3 levels of membership over here at School of Trade. If you need any help with anything, I have someone standing by 24/7, 365. I keep them locked up in a well-ventilated cage, right? I'm kidding with you. And they're here to help you guys out anytime you need. Guys, there's that free trial. I'm going to teach you all my breakout patterns. I'll teach you everything well, not everything. I'm going to hold the good stuff for when you become a member. But I'm going to teach you guys all the patterns, all the technical analysis in that free trial. Check it out. You'll see what I'm saying. I want to thank you guys so much for being here today. Thank you so much for tuning in. My name is Joseph. Shall we do it again tomorrow? Same time, same place? All right. I'll see you there, 8 p.m. tomorrow. Adios, amigos. Bye-bye for now.